Right, hello and welcome to Camel Finance. I'm your boy Camel and this is your weekend's video. Now, today I'm mostly going to spend looking at the charts because the market will have taught us something this week. The market will have revealed a bunch of things this week to us, and it is our job to tackle the weekly closes and to make sure that we understand what the expectation is for the coming weeks based on the weekly closes. So I'm going to do a deep dive TA as always on the weekend. But before I do, I want to answer this right here from my boy Z. So shout out to Z for this. Okay, he'd love my opinion on this. So let's get into this. Right now, the reason everybody's getting excited about the price is they're thinking about ETFs. Okay, we don't really want that to be the kind of thing that moves price. That is the kind of subjugation that is a process of taming that we see being played out. So I've jotted some notes down here about the ETF, and I want to discuss both sides. Okay, I want to discuss the side of the ETF which is bullish, and I also want to think differently about the ETF. Now, before I get into this, I wanted to start by saying, okay, society turns to persecution of anything that it doesn't agree with. Let me say that again. Society turns to persecution of anything it does not agree with. So I urge you before I get into this, okay, to keep this statement in mind. Do not persecute this because it gives you an emotional reaction. There are plenty of people out there at the moment that are convinced the ETF gets approved and the price goes straight into orbit, no questions asked. That's certainly one possibility, okay? But just because I am about to conduct a thought experiment, lay out a separate hypothesis that is contrary to this current narrative, I do not want you to turn around and react with emotion. Instead, I want you to just abandon your emotions, abandon the innate drive to persecute anything that goes against the grain, and instead just objectively think about this as a thought experiment. Is this a realistic scenario, and is this second one even feasible at all? So thinking about this spot ETF approval, here's my initial thoughts. My initial thoughts, like most people, are there is going to be huge inflows into this space, okay? There's going to be massive inflows. I think that seems kind of like a given, right? It seems like a given that pension funds are going to be able to get an allocation without having to go through the regulatory hurdles or without having to worry about custody and taking hold of keys and cold wallets and any of this sort of thing, insurance policies in case they were to lose the keys or get hacked. They don't have to deal with that, right? They just buy the ETF over the same regulated exchanges that they buy all their other assets like the stock market, and then they just add it to their balance sheet, add it to their portfolio, and happy days, right? So pension funds can do this, insurance funds can do this, family offices, sovereign wealth funds, the list is absolutely endless. We also know the top 10 ETF providers have something like 17 or 18 trillion dollars under management, and even a 1% allocation of that should be plenty to see multiple six figures per Bitcoin. So my initial thoughts are pretty simple, okay? ETF gets approved, we see some level of game be played, some kind of shakeout, and then as the inflows start to arrive, Bitcoin's price goes into orbit. There's always people out there that say, yeah, well, good luck with that because Canada and Europe already have spot ETFs and we don't see any kind of inflows from them. There's no real demand for them. And whilst that is true, the size of the Canadian and European markets are a fraction, okay? An absolute fraction. Plus, they're not the go-to places. They're not the go-to places when BlackRock comes out and offers its clients and advises its clients, and this is true of Fidelity as well, to get an allocation to Bitcoin. Their clients are going to listen, okay? Nobody cares about the Canadian or the European ETFs, okay? Nobody cares about the fact Germany's got a spot ETF, okay? Believe me, and we can see that because no one's buying them. The same will not be true for the US ETFs, and we know this because this is certainly not priced in yet. How do we know this is not priced in? Because we have seen fake news of ETF approvals come out and the price moved 10 or 15% in 5 to 10 minutes. This has also led us to understand this thing that might be operating underneath the surface known as the bull market multiple. Bank of America calculated this around 118 based on the fake news that we saw about the iShares Bitcoin spot ETF being approved, whereby we saw around 400 million of inflows into the Bitcoin space and the market cap increased by 57 billion in 15 minutes. We can deduce that the bull market multiple may well be over 250, meaning for every $1 that comes into the Bitcoin space, $250 will be added to the market cap. So with all that said, this seems like a given, doesn't it? This really does seem like a given. They're going to approve a spot ETF, the price is going to go into orbit, there's a bull market multiple at work because there's only really around 2 million coins in the free float. At this current level, there's only really around 2 million coins for everyone to fight over, and we're looking at billions and billions coming into this market, 17, 18 billions at minimum coming into this market with this bull market multiple. So I would say that thinking like this, is really low brain power. It doesn't take that much brain power to look at everything I've just said and go, yeah, that makes sense, right? I think we can all agree that I don't have to be a genius to say everything I just said. And lastly, it could be that simple, right? It really could be that simple. Maybe we are finally at that point in the S-curve of adoption where the thing is about to go vertical. Maybe it's just as simple as the human brain is not good at comprehending exponential curves, and thus they really are going to approve this thing. Billions are going to flow in, which is going to multiply up by 100 or more times, and that is going to convert to a multi-trillion-dollar market cap for Bitcoin and multiple hundreds of thousands, if not millions of dollars per Bitcoin price. Maybe it really is that simple. But one thing I have learned from all of my time in the markets is that thinking differently is often very beneficial, okay? There's that great saying that I love, which is, when everyone is thinking the same, somebody ain't thinking. Long-time viewers of this channel will have seen me be contrary on multiple occasions, and those contrarian trades work out. They usually work out. Got a couple of them open to this day. And so thinking differently never hurts. If nothing else, we think differently about a scenario, and it prepares us for the worst case scenario that never shows up. At least we were aware of a possible way to be blindsided. If we only think in one term, okay, if we only think ETF approved price goes up, then if anything other than that occurs, we will not be ready for it. The facts are the facts and the charts are the charts. And the charts currently support a left translated cycle and a wave 5 extension. So if you don't know what I'm talking about, this is the chart currently. It currently supports a left translated cycle, meaning we are going to put in a top to the left-hand side of the midpoint of this 4-year cycle. Said another way, the top is going to come within 24 months of this bear market low back from the FTX collapse in November. Now, let me be really clear here, in case you're not familiar with this. If you want a standard 4-year halving shape, then all you need to see is some basing here, right? Some basing or a pullback perhaps, and some more basing, and then the little pump into the halving, the sell-off post-halving, and then we can resume our standard 4-year shape. If we see something like that, then we can scratch this one off easily and say, yeah, definitely not going to happen. But again, charts are the truth. And right now, we are in a parabolic advance. Now, I'm not saying this will continue, but what I am saying is if it does continue, then what do you think is going to happen? We get up here and suddenly the halving occurs and we just continue up. I mean, maybe, right? But that to me doesn't seem very realistic. What has been in the charts for a long time is this left translated cycle top that then forms the first true secular bear market decline for Bitcoin. Not only that, this is also supported by an Elliott wave count here. So again, for this count to be invalidated, if you are championing a standard 4-year halving cycle shape, then you need to see a base or a pullback here so that we can then get our little pre-halving pump, post-halving sell-off, and then the standard 4-year cycle resume. If we do not get that, if we continue to put in 3, 4, and 5 into 4 and then work our way up into 5 of the 5, what do you think is going to happen? This? Of course not. I keep making this point over and over again. The charts don't lie. Like I said, this is to be determined. This has not happened yet. And we certainly could base here. We certainly could have a correction here. Anything and everything is on the table. But if we do not start to do any of that soon and we continue to fly up here, then it sets us up quite nicely for a decline. Take a look at this, okay? This signal right here is exactly the same as this one on the right here. Last time this occurred, we popped 143% in no time at all. And if this move was to repeat, we would be at $86,000 by the end of 2024. Again, the charts don't lie. The charts currently are telling us that we are going to see this parabola, we're going to see the wave 5 complete, and we're going to get a left translated cycle top that then enters the first true secular bear market decline for Bitcoin. Again, if you don't want to see this, then what you need to see immediately is basing or a pullback. Anything other than that, and again, we are set up to see the Max Payne scenario. So I continue to think differently here because the charts currently support left translated cycle tops and wave 5 extensions. Now, of course, the problem here is if this continues to play out, this sets up the distribution hypothesis. The distribution hypothesis, of course, is that once we get up here, they could approve the ETF at the top, and instead of, when somebody buys shares in the ETF provider going into the spot market and buying the Bitcoin one-to-one in the spot market, instead of that occurring, what we could see is them offload the Bitcoin that was accumulated down here at the lows, and potentially even way before that. For all we know, BlackRock has been accumulating Bitcoin since way back in 2019 or even before, okay, and has been waiting for this ETF approval, playing the long game, ready to dump all of that Bitcoin to the poor ETF buyers. If this was to happen, it will strip demand from the spot market and it will create infinite downside sell pressure on the price of Bitcoin. Again, I just want to, one last time, read this statement, okay? Society turns to persecution of anything it doesn't agree with. If you are reacting here with emotion, then please check yourself, make sure you put those emotions to the back and only think objectively. Is this actually a possibility? Because if we cast our minds back to 2017, do you know what event marked the exact top in 2017? It was, of course, the futures ETF launch that marked the exact top in 2017. Whilst also playing the advocate here, what do we know from the precious metals? Do we know, or do we not know, that the ETFs have been used to keep a lid on price? Now, conversely, with gold, when they first launched the spot gold ETF, we did see the price go parabolic, okay? We did see a run-up post-ETF approval, which feeds back into this first side of the argument. So maybe we do see the approval of the ETF and a massive parabolic advance, just like we did with gold. But thereafter, what we certainly saw with gold and with silver is that the ETFs were used for rehypothecation and price suppression. So is it possible that they actually want to try to tame Bitcoin using these ETFs? Is this a possibility? Now, again, I don't really know, okay? But what I do know is the charts support seeing a change in cycle shape. And if they were to launch the ETF at the top here and it was to mark the top, that would just be a repeat of 2017. If they were to buy a bunch of Bitcoin cheap and then offload it as a distribution tool, that would just be a repeat of what they do with gold. And of course would strip demand from the spot market, causing an extended bear market that takes a lot longer than the 12 months that we're used to seeing for Bitcoin. Why might they want to tame Bitcoin? Well, because did you know, fun fact, at $100,000 Bitcoin, Bitcoin will have created more billionaires than any other industry. Did you know that? More than oil, more than tech, more than internet. So to my mind at least, it doesn't seem unreasonable that they might want to slow down having a bunch of retailers become billionaires. And again, to continue this thought experiment, okay, this to me is where this thing starts to make sense in my mind at least. If, and it's still an if, this left translated cycle in the wave 5 extension plays, okay, if indeed we continue in up only, and they just so happen to launch the ETF at the top right around the time of the halving, and then we go on to enter a bear market decline. Objectively speaking, it will be very easy to declare that Bitcoin has died, that Bitcoin is broken, because of two factors. Number one, the halving will not have catalyzed a bull market. Okay, it won't have. And number two, the 4-year cycle will have completely changed shape. People will declare the halving can't pump the price anymore. People will have to declare that the 4-year cycle shape is broken because instead of go 3 years up, 1 year down, 3 years up, 1 year down, we went 1 year up or a year and a half, whatever it is, and 2.5, 3 years down. So people will be like, whoa, what's happened here? The cycle's broken. The halving doesn't catalyze bull markets anymore. The ETF was supposed to pump the price, and instead all we're seeing is an extended bear market. And then when we get 12 months into this bear market, people will be saying, well, that's it. It's had a 12-month bear market. Super cycle, bro. And what if it doesn't? What if it continues to bleed? Which is what cycle theory states. It's also what Elliott wave theory states. And as it continues to bleed, people will have no option but to capitulate their Bitcoin. But to come to the conclusion that Bitcoin is dead. Okay, the 4-year cycle is completely broken. We're now entering a second year bear market decline for Bitcoin. Like I said, the halving didn't work. The ETF didn't work. The halving shape, the 4-year cycle shape is broken. People in this neighborhood will be incredibly scared. Initially, they'll think, yes, pull back before the slingshot to 1 million. But then when it doesn't come, how much pain and suffering is this going to cause? And as if that's not enough, this really, objectively speaking, would have been in the charts the whole time. Again, it's still an if this plays. But if it does, it would have been in the charts the whole time because we've got cycle theory and Elliott wave theory pointing to this. Meanwhile, BlackRock could continue to distribute all the Bitcoin it bought for cheap all the way down as people capitulate and capitulate and capitulate until retail is largely out of the market because retail is not going to sit through this, okay? Retail is not going to sit through this when the halving no longer works and the 4-year cycle is broken and the ETF didn't pump the price. Retail is going to puke its position. Whether it pukes it near the top or much further down, it's going to puke. And BlackRock's going to be happy to hoover that stuff up right in time for the next 4-year cycle low. And then it's possible that out of that 4-year cycle low, that's when we get the super cycle. That's when the whole thing repeats, the whole 16-year cycle. So that is 3 right translated cycles, meaning 3 years up, 1 year down, 3 years up, 1 year down, 3 years up, 1 year down, and then another one of these left translated cycle to finish, right? 1 year up, 3 years down, to make a 16-year cycle comprised of 4 4-year cycles. BlackRock's probably well aware of this 16-year commodity cycle. And if this whole thing is to play out, and again, I'm not saying it will, I'm just saying if it were to play out, that would be the way to get retail out of the market. That would be the way to steal all of the Bitcoin from retail and hand it over to the institutions ready for the true bull run to the multiple millions, ready for the massive inflows in the ETFs. way to not only tame Bitcoin, but also to shake out the future billionaires, maintain dominion over the masses. Two completely different scenarios. One that I think is safe to say requires low brain power, and it really could be that simple. Don't get me wrong, I don't want this to happen, okay? I really don't. Of course, I would rather have the ETF come in, Bitcoin moonshot over a couple of years, straight up, shallow pullbacks, or even 30 or 40% pullbacks along the way, but Bitcoin go parabolic over a 3-year period, and the ETF bring in billions and billions and billions, and the price go to multiple hundreds of thousands, if not $1 million Bitcoin, and Camel can live happily ever after, okay? But, like I said, thinking differently, if nothing else, gives us the ability to look back and say, well, at least we were prepared for the worst, okay? At least we were prepared and it didn't show up. But if you're not prepared for an alternate reality, if you're not prepared for an alternate situation, then assuming this doesn't happen, you will get wrecked, okay? So Z, I hope that answers your question. For everyone else, I hope you found that valuable. Like I said, this is the most important point because I am a technical trader, right? I'm a chart guy. This is right until it's wrong, okay? So again, I say, and it's really important, if we continue to follow this fractal, even roughly, even if we deviate away a bit and then go like this and then deviate away and go like this, right? If we continue up only mode, then the cycle's going to change shape. The cycle is going to change shape. And if you want a standard 4-year cycle repeat, well, this doesn't look anything like a normal cycle at the moment, does it? This is just the truth. This doesn't look like a normal cycle. You need to see this thing base. You need to see this thing pull back, pre-halving pump, post-halving pump, dump, and then move up like this. That's what you need to see if you're a 4-year cycle champion. Otherwise, you are deluding your own eyes because right in front of us is a potential parabolic advance and a blow off top that's going to top sometime around April or May at the latest of next year. So be aware of everything, draw your own parabola on a chart, and if you're a 4-year cycle champion, if you believe the halving drives bull markets, if you believe the ETF is going to pump the price, then you better hope this thing breaks down pretty soon. So with all that said, I'm actually exhausted. I'm worried this is probably going to be a bumper episode because my voice is kind of sore from all that talking. But the dollar, as you can see, is heavy, okay? So unless we can get a breakout of this kind of neighborhood, then we're probably going to continue to see pressure to the downside. Happy days there, right? That makes sense. We also got the the 10-year yield, the chart of truth. Look at that. If I move this out the way so we can really see what's going on. Breakdown, multiple retests, resumption to the downside, okay? That makes sense because we know they're paused. Markets are forward looking, so they're going to continue to price this. And this is probably going to go all the way back down to the lows at around 3% at least. Now, maybe not at this angle, but this trend is clearly down and I think it's going to remain down. Bitcoin is still doing Bitcoin things. Long and strong continue to push. Like I showed you with these charts, you know, you need a base. Otherwise, we're going to keep going in up-only mode. And if we keep going in up-only mode, you know what that means by now. Here's the XRP trade for those of you that are interested. Look, perfect move into resistance, followed by some more chops. So we're probably going to continue to range and then look for a breakout. But I'm going to continue to push this trade because if we can get out of this massive, massive, massive triangle pennant thing, then we are going to see huge numbers out of here. So long and strong continue to push on XRP. Not really interested. All of this I consider no man's land. I don't really care. And we just want to see this thing break out. Hopefully that can happen in the not too distant future. The crypto-related equities are trying my patience. And I'm sure they're trying yours as well, right? But with due respect, and I don't mean this in an arrogant way, when my patience gets tried because of the length of time I've been in markets, it's normally something that I look at introspectively and I go, okay, we're about to do something major here. Normally, I have a lot of patience, I've got a lot of experience. Stuff like this doesn't faze me, right? Now, not necessarily pertaining to Coinbase. Coinbase has had a nice breakout, retest, resumption, continues to push up, happy days. The same's kind of true of MicroStrategy, right? Breakout, retest, resumption, and up we go, happy days. But in terms of Riot, this is grinding my goat a lot. This is really grinding my goat. This is really starting to annoy me and frustrate me. And I know it must be frustrating for a bunch of other people as well, because like I said, if I'm getting frustrated, that means everyone else is getting frustrated too. My eye has just been drawn to this level. Yeah, I like that a lot better, actually. We'll leave that there. But I think this thing is getting ready to break out. Like I said, usually when I start to get frustrated and I start to get annoyed and emotionally worn down, that means it's time for me to do the introspective work, for me to realize that it's important I don't lose interest because something big is coming. Now, nobody knows if that is coming or that, okay? But something big is coming here, and I can tell that because emotionally I'm starting to get worn out and frustrated with this move. The exact same thing applies to Marathon. Like, objectively speaking, it's moving up, right? It is moving up, but it's also not making new highs just yet. Again, incredibly frustrating. It's annoying me that it's taking so long, but that to me says that we're either going to do this or this pretty soon. My bias is to the upside, but of course there's no way of knowing until the fact occurs. Pretty good week for the stock market, I think. So we've definitely moved from oversold to overbought. Maybe some level of pullback before we resume to the upside is reasonable. We've got that half cycle low due at the end of this month. So something like this, little pullback into the half cycle low, and then a resumption of the uptrend makes perfect sense to me. For now though, long and strong continue to push, and I do think these lows hold. I really do think those lows hold. I don't think there's any danger of us coming all the way back down to sweep those lows. If we did, we'd be out of the trade by the time we got stopped out and sitting on the side, so we're certainly not going to have to encounter any large drawdowns like that. But for now though, I do remain in a position thinking that this is probably what comes next. Same deal for the Nasdaq, right? Long and strong continue to push. There's a gap there that may or may not backfill. That would kind of make sense, and then we can continue to move higher. But again, long and strong, it's exactly the same deal for the Dow Jones, isn't it? So there's some gaps here. Maybe we have to do some retesting and pulling back because this is a strong move, but at the same time, it wouldn't surprise me if we do something like this and then just continue to lock everyone out. Crush Friday has occurred in standard fashion, so now sub 14, or on a 13 handle for the VIX. Check that out, okay? This is probably going to continue. Counter trend bounces along the way makes sense, but like I said, we're probably going to be on our way down to the bottom of this range in no time. Russell 2K, great looking chart, breakout, retest, looking for that resumption higher. So a little bit more chop, like my red arrow squiggle suggests, makes sense. But overall, I do think this is going to start to rip higher. Here's that oil short, and the best current example of thinking differently, right? Remember back here, when I went short oil, people thought I was mental. A war in the Middle East had just broken out. Every news outlet like CNBC was posting $100 to $150 oil comes next, and that's certain and guaranteed. And I said, no, no, no. The chart says we move down. As you can see, short and strong continue to push. Unless we break out this downward sloping red resistance line, then I remain in the short. Been saying with gold, maybe we get this and a rejection. Maybe we get an all-time high break and I enter there to capture the 50% move that should come in quick succession thereafter. But I've also been saying over and over again, I didn't really trust this move. I didn't really trust this move, and I was having a conversation with one of you in the comments about this, and I said maybe some of the reason I'm not interested in gold at the moment is because we did really well at capturing this move here. So I don't really care about these sort of baby pips in this neighborhood or the trade from the breakout level to here. I don't really care about that, okay? If we are going to do gold things and break an all-time high and target 3K, then yes, that's a move I want to be part of. But all of this, to me, I'm not really interested in it. And like I've been saying over and over again, I've been trying to solve this complex puzzle, haven't I? Right? On the one hand, the dollar's coming off and yields are coming off, which is generally speaking bullish for gold. But is it a risk-off moment right now? Is it gold's time to shine? Have we got massive rounds of inflation brewing? Well, the jury is still out on that. But as it stands, CPI is coming down, PPI is coming down, risk on in the stock market and crypto seems to be at play. So again, I ask, why gold now? Why gold now? Doesn't it make more sense that whilst the stock market and crypto have a blow off top, gold rolls over one more time, and then that's how we get our generational buying opportunity to get in the next weekly cycle low for gold and silver, and then we come swinging out of here, all-time high break, and that is a massive, massive move. That's what I think. That's what I think is most likely. Again, it's a one day at a time situation. Looking at silver though, so far, objectively speaking, rejection at resistance. That's not a super bullish setup, okay? Now, it could certainly break out next week, and then there's that big red one that we've been lining up. But overall, kind of wouldn't be surprised to see this. Again, same as with gold. Why silver now? I'm not entirely convinced now's the time. What about the miners? Miners, they don't really look bullish, do they? That's a failed breakout. And what about the juniors? Again, it's a failed breakout. There's a lot of work to do here before I can be bullish the metals. However, the time will come, but one day at a time as always, let's focus on where the capital seems to be best allocated, which at the moment is the stocks and, of course, the king of all kings, the bull of all bulls, Bitcoin. So I hope you enjoyed this. I hope you found value here today. I'm just about to record a members video, so members, look out for that. And in the meantime, have a great weekend. Until next time, take care from me. All the best. Cheers. Bye.